Hello everyone. So today we are going to talk about momentum-based strategy. The main point of this strategy is to show that to take a different view from the index-only trading that we do in the futures and option. Rather than that, let's look at stock options as well. So without further ado, let's start on the strategy. So we'll go to the key page. We'll click on my strategy. We'll click on create strategy and let's name it momentum precision. So this is a pure momentum directional based strategy that we are seeing. And the idea behind it is to try to capture directional strategies that are happening in stocks specifically, and how to exploit that with the power of KEEV and additionally with options. So here we are going to take both the positions. Interval is we are going to look at 1 hour because the intention is to take a position for a monthly expiry for a particular stock. So the 1 hour is because we have a 30-day time period. So rather than having a strategy that hits the buy and sell triggers multiple times and creates a issue with the transaction cost, we'll have an interval of 1 hour which reduces the false signals of any trend strategy. We're going to have a buy strategy of super trend. Super trend crosses below close, and we'll add that with RSI. RSI is higher than 50 because we want a strategy that is already so when the super trend whenever you see any chart, when a super trend crosses above, the RSI is already moving higher before that. So ideally, RSI should be higher than 50 before entering into this trade. So for sell also, we'll use both the same indicators, super trend and RSI. RSI crosses below, let's say 60. So it is important to note that we are not adding RSI crosses above or crosses below. Rather, we are putting RSI higher than or lower than, because RSI is a secondary indicator, that is a confirming indicator. The first one, that is the super trend, will give us a trend signal, and RSI will give us a momentum signal. So we are the primary indicator here is the super trend, and the confirming indicator here is the RSI. So the point is we get exposure to both the views, that is the momentum view and the trend view. So we'll look at the strategy and find out whether the strategy is profitable enough for us to deploy in the markets. So because we are looking at options, so I'm going to take futures triggers, futures uh, here, symbols here. So the TCS future, because we don't want only IT exposure, rather we want a more wholesome exposure. Banking and IT, then FMCG, Asian Paints, then even cement, let's say. It is important to also be mindful about selecting stocks whenever you have a particular strategy in mind. For example, if it is a momentum strategy, then you want stocks that are historically low beta because you don't want a highly volatile stocks also, but also you want an exposure to volatile stocks. For that, let's say we take Adani Enterprises, because here, whenever there is a change in trend, the change in trend is very quick. And here, because of the strategy that we are choosing, we'll be able to exploit that as well. So quantity is fine as it is. The product is delivery because we are selecting a, let's say, a proper monthly strategy. So here I'm going to backtest it from June 30th to 29th year. So we'll backtest the strategy for a year and we'll see how the strategy has performed. So here we'll have to wait for 5 to 10 seconds for the system to give us a proper result here. So we are seeing that Infosys has given us a good return. TCS has not given as strong a return as we expected. Infosys, Asian Paints, Ultratech, Adani has given a very high return because historically, as we know, it is a fast moving stock in either trend. So if we follow a momentum and trend based strategy here, then it will be fruitful for us in the long term. So this is basically a brief template on how to form a strategy in on KEEV and how to exploit the backtesting function here, as well as I'll show you how to run a option strategy here. So for example, if we look at Adani Enterprise only, so we'll click on place order and options. Then we'll also select the interval. So we want this strategy to be active for the first 10 days of the month only, not the remaining 20 days, because we also have to make sure about we also have to take into account the liquidity factor. By the end of the month, the options will ideally turn illiquid as and when the expiry is coming nearby. So here, so the ATM would be based on futures or spot, whatever is comfortable for you. No, we don't. We are not choosing. We want if we want to roll over or not. So, for example, we'll create a bull call strategy here and a bear put strategy here. So, in a bull call strategy, you want to buy the ATM call and you want to sell a further OTM call. So, let's say two OTM strike price we'll choose to sell, and similar in the sell side, we'll buy the ATM put and we'll sell the two OTM put, and we want a stop loss for the strategy. So we'll click on, do you want take profit stop loss for based on option premium? We'll click that as yes. With that, we'll go to the section here where strategy level, where I want to adjust my PNL on an absolute basis. So I want to take profit, let's say at 5,000, and I want to trailing take profit is at 10% properly. If you want to understand more about these words like trailing take profit and trailing stop loss, you can find it on a YouTube page also. And we'll create a stop loss of let's say 1,000 rupees. So I'll click on run live and this strategy would be active in the market. But also it is important to know that because today is Saturday, the strategy won't be run live right now. It will be active when the market opens. So this is basically a template on how to use a momentum and indicator based momentum and trend following techniques to exploit your trade better. And also, moving forward, you can check out this document as well. So this document, if you want, it will be available for you in the description below, where I'm basically explaining the logic behind this trade. And yeah, also you notice that the stop loss and take profit is at 99%, because on the strategy backtesting level, I'm not adding any stop loss or take profit, but rather on the deployment side of it, the execution side of it, when I execute an option strategy, I want a stop loss and a take profit that I've mentioned separately. So here you will find the backtest result of different stocks that are already backtested by us. And so this will basically show you, for example, Indus and uh, gave us this return, and return C is basically return that is adjusted to taxes and brokerage fees. So here, even after that, we are seeing a good amount of return here. And it is important to know that the number of trades are also less. For example, we had a backtest of a year. So in a year, if there are only 60 trades that are going on, that it basically tells us that you're taking five trades or three, four trades. In case of a few stocks like Adani Enterprise, you're taking less amount of trades, but you're getting a good amount of returns. So that is important, and that is shown in in these two columns as well. If you so this document will be available for you in the description below, and also this strategy is also available on the Astra part of it. So Astra basically has different strategies for you to use, or even if you want to tweak the strategy and you want to deploy the strategy in market, you can do the same. So this is basically named Momentum Precision for FNO, and you can find out the backtest result of the stocks and the future symbols that we have done previously. So this was this was a point of the video that to show you how to use the future symbols to deploy indicator-based option strategies. And so, if you have any questions, you can you can write down in the comment section below. And look forward to seeing you all in the next video. Thank you.